Hi everybody, this is Tim from TradingStrategyGuides.com. Morning here in the central part of the U.S., Texas to be more precise. So good morning. Hope everyone's got some coffee on their desk. By the way, can you guys believe it's July already? Golly, half the year is gone. Today, we're going to look at the stochastic day trading strategy. But first, I want to make sure that everyone can hear me and see the title slide. Hi, Kirill. Again, apologize in advance for mispronouncing your name, if I do. So good trades. Very cool. All right, while I'm waiting for your responses, I'm going to say this. If you're watching the recording of this live webinar, you can speed it up by clicking on the gear icon in the lower right and selecting a faster speed. If you're watching live, well, you get to ask questions, and that's the trade-off. Hi, Stuart. I love the UK. Some of my best friends are in and from the UK. Hey, Casey. Hi. Shalendra. For Civil Star. Dennis. Milind. India. Very cool. Casey in Latrobe, Pennsylvania. You guys, if you ever get an opportunity to go to Latrobe and what's that town you live in, Casey? I'm drawing a blank right now, but this is some of the most beautiful place in the U.S. Hey, Jean. Kairos. I apologize if I pronounce your names wrong. Ligonier, right? Ligonier. Ligonier is beautiful. It's the cutest little town in the history of little towns ever. Tanzania, very cool. Dennis, I have some friends that just went to Tanzania and Uganda. Hammer, Melbourne. I've also got a bunch of friends in Australia too, so that's very cool. Okay, let's kick this thing off here. Oh, yeah, this is the graphic I meant to show you. This is where the little gear is for you to speed up the video. Don't forget to click the subscribe button and then click the bell. Wow, I can already tell I'm going to have trouble talking today. Click the bell for notifications. Now let's take a look at a couple of the trades that we've got open right now. This is Boston Beer. Boston Beer looks like it's doing a bit of consolidating right here. My stop is still up here at 367.65. I've got 617 locked in. It's just under Friday's big move, holding it right there until it makes a new high. Then I'll probably move it up to 371.75-ish, somewhere just under this swing low. In any case, this has been nice. S&P 500, it's up about $15 right now. Got into this a couple of days ago, 29.68. Looking for 29.98.25 as our target. I'll take half off there and move the stop up to 29.68 at that point. It was a nice trading range break. So just waiting on this, just wanted to update you on it. Planet Fitness. You win some, you lose some, you rain a few out. Planet Fitness went up and hit the stop loss on Monday for 2% loss, or under a 2% loss, because my second position was up a little further, but pretty close to a 2% loss. This happens, no big deal. I'm done with the Planet for now. Hey, The other day, my friend called this purple fitness. Because, that's one of the colors. Anyway, I'm moving on to the next setup. Tesla. I hope you guys got this Tesla on Monday's close. This again was from our special webinar last week, so I'm sure some of you hadn't seen this setup. For those of you who saw the webinar, I went ahead and I entered this on Monday at 227.17. The first target was hit yesterday at 235.88, so I closed half and moved the stop up to break even. That's where we are right now. I only mention it here because those of you who did see last week's webinar will probably be in it. I want to make sure that you guys know that it's there. Okay, I'm going to start out with a tough love routine here. I do this once in a while. Some of you have probably heard it before. Anyway, when I look at a strategy that uses indicators, I invariably get comments from some indicator hater. I'm a poet. Some indicator hater that complains that indicators are lagging or leading or, some other weird comment. Please save yourself and all of us some time. Yeah, many indicators are lagging. Of course they're lagging. The whole point of many indicators is to show us where we've been. And the only way to know where you're going is to know where you've been. So spare us the comments about indicators. But with that having been said, I'm happy to respond to legitimate questions about indicators and other trading things. Even if you disagree with me, that's fine. It doesn't bother me. It doesn't make me angry. I just don't want anybody wasting our time trying to show us how superior they are. That you're a pure price action trader or whatever, and you don't use indicators and blah, blah, blah. If that's your shtick, more power to you. I support you doing what works for you. Just don't be critical of me showing what works for me, because that's my job, right? That should be a maxim, shouldn't it, Casey? Yeah, that should be. Okay, well, let's talk about this stochastic indicator. The stochastic is a momentum indicator that shows how strong or weak the current trend is. It helps you identify overbought and oversold market conditions within a trend. You can find the stochastic indicator on most any trading platform, and this is exactly what it looks like right here on TradingView. It's simple to use. It's an oscillator that ranges from 0 to 100. And you see there are horizontal lines at the 80 and the 20 levels, because those are significant levels. Okay, the 80 represents the overbought condition. Typically, you'd be looking for the market to pause or reverse from an uptrend, and the stochastic crosses the 80. Conversely, the 20 level represents the oversold level, and typically you should be looking for the market to pause or reverse from a downtrend when the stochastic crosses below the 20. Now, I'm not going to go deep into the math of the stochastic indicator, but if you're interested, you can check out the blog at Trading Strategy Guides for more details about that, and I'll put the link below this video. Could take me an hour or so after this, maybe even a couple of hours after this webinar is over to get all the links down there. I'll get them there as quickly as possible now. Okay, for now, just know that the two lines of which the stochastic is made consists of moving averages, the %K line and the %D line. %K line is calculated using the close and a 14-period average of the high and low prices, and the %D is simply a 3-period moving average of the %K line. So the %K line is the faster and more responsive of the two. In this image, the %K line is blue and the %D line is orange. So you can see anytime you look at it at moving averages, typically the slower of the moving averages will have smoother movements, okay? And the faster of the moving averages will be a little bit more radical or a little bit more whippy. So that's typically how you can tell. And then we usually think of the slower moving average as a signal line, and when the faster moving average crosses it, that gives us the signal. So we're going to be taking trades from a 15-minute chart with this strategy. And these are the settings that we recommend for the 15-minute chart. I think the default may be 13. We extend the length out to 14. The D is 3 and the K is 1, and I believe those are the default settings. I'm going to show you the rules for a buy trade initially. And of course, the signals can then simply be reversed for a sell trade, and we'll discuss that a little bit later on. Any questions so far? Let me see. Actually, Casey, in order to know where you need, where you've been, you need to know where you. In other words, what you're saying there. Yeah, I think that is one of the maxims, actually. Check on that, but if it's not, it definitely should be, right? Okay, so step 1, check the daily chart and make sure the stochastic indicator is below the 20 line and the %K line is crossed above the %D line, okay? So you're going to look at a daily chart and just to determine what the overall trend is, okay? And practically, I think what you'll want to do is just sit down, when you sit down to trade in the morning, is to look at all your daily charts and make a list of which pairs you'll be trading for that day by finding all the ones where the %K has dropped, at least the %K has dropped below the 80 and has crossed above the %D line. Okay, happened right here. So it dropped below 20. I'm sorry, dropped below 20, and then the %K crossed the %D, which is your initial signal. So make a list of all the pairs that qualify, and then drill down and look at 15-minute charts for each of those pairs. Now you'll want to watch the 15-minute chart because it could happen anytime during the day, but you're going to look for the exact same signal on the 15-minute time frame. Wait for the stochastic to hit the 20 level, drop below the 20 level, and then wait for the K line to cross above the D line. Okay? And that's your signal to move on to the next step. So you will probably be going through 15-minute charts over and over and over and watching for this signal to happen. Now this signal is not valid until the candle closes. Okay? So after each 15-minute candle close, you'll be going through all your 15-minute charts to find this signal. Okay, Milin, can you change the K setting to 3? I think, I'm not sure exactly what that effect would have on that, but I'm all for trying out new things. So I discover all kinds of cool features by trying new things. So try it. Take a look at it, see what it does, see how it affects the indicator, see how it affects the lines, and thoroughly back test it before you actually trade real money with any kind of change, any kind of settings change or indicator change or whatever. Back testing is not only for testing to see that the strategy works, back testing is also for your peace of mind. If you have confidence that your strategy your algorithm works through extensive back testing, then when you go through a series of losses or drawdowns, you'll have confidence to keep sticking with your algorithm because you know it's going to turn around at some point. Okay? Next step, after you find this situation, is you look for the percent K to cross back above the 20 level. Okay? So after it crosses, that's your first signal. Then you want to watch that particular pair more closely. Obviously, this happened probably an hour, hour and a half later. But once you've got the signal of the percent K crossing above the percent D, then you're going to want to watch that chart more carefully for the time when the percent K crosses above the 20. Okay? Percent D should follow, but once the percent K crosses that level, you can go on to the next step. And once you identify a chart where the percent K has crossed back above the above the 20 level, you want to look for a 3-candle swing low pattern on the chart. And this is just a perfect 3-candle swing low. Now, basically what you want is lower lows and lower highs, and then a higher low and a higher high. Now, this higher high just needs to be above the second candle. It does not necessarily need to be above the first candle. Okay? So, the second candle needs to have a lower high and a lower low than the first candle. And then the third candle has to have a higher high and a higher low than the second candle. Okay? That's the next step. Step 5, you will buy when the highest point of the swing low is broken. So you have this 3-candle swing low pattern right here. Now you're going to look for a break of the highest part of the swing low pattern. So if this candle is higher, you can look for a break of this one. If this candle is higher, you're going to look for a break of this one right here. Okay? Next step, once you buy this break above the prior candle, the swing, the highest high right here, and this is an example of the first candle being higher than the third candle. You'll buy right up there. You put your stop at the prior swing low, not the current swing low pattern, but the prior swing low pattern. Put it 5 pips below that. Give me just a second here, I lost my notes. So, talk amongst yourselves. Almost there. Okay, let me check out questions for now while I'm waiting for this to come up. Uh, Shalendra, yes, I would use the same settings for the daily chart. Malind, yeah, that probably would smooth that out quite a bit. I'm always in favor of uh, lengthening moving averages because I just don't like seeing whipsaws in my indicators. Cyril, I believe that you would want to experiment on Bitcoin. I haven't actually tried this strategy with Bitcoin, so just experiment with it. And like I say, you've got to experiment. You've got to try things um, just to see what works and back test the heck out of all of it. Okay. Benjamin, 14, 3, and 1. Stuart, I would say yes, because the concept of this particular strategy is like many strategies, it's based on emotions, and these patterns appear on most charts because the same types of emotions are taking place uh, with the traders on these pairs. So, so yes, I would say again. I say though, try it. All right, this uh, strategy has been thoroughly tested on Forex. Okay, so if you're going to use it on anything other than Forex, then you want to do some back testing. Okay, and again, I say you need to back test these strategies anyway, not because you need to find out if they work, but because you need to know in your heart of hearts that they work. Because part of your job is pushing through losses, kind of like my Planet Fitness loss. Okay, that didn't hurt my heart at all. I mean, that's just part of the job, and sometimes we lose. I don't lose many of those uh, trades that I analyze because the strategy that I'm using is really, really consistent, particularly taking first target at the 1 ATR. I mean, that just works consistently over and over and over, especially looking for breakouts with the other criteria that I talk about. Um, so, you know, I don't take loss very often, but when I do, it's just a thing. You know, it's just move on to the next thing. I can't let it affect me. But I have confidence in my strategy, so I can still take the next trade without fear or any other kind of emotion. I just do it. Okay. Okay. I'll step back a couple of steps here because of my losing my notes. I'm not sure exactly what happened, but the window I have my notes on just closed. Okay, we're back. Okay, once you have identified the percent K dropping below the 20, crossing above the percent D, and then crossing above the 20. At that point, you will look for the swing low pattern. Okay, swing low pattern consists of 3 candles, one candle. The next candle has to have a lower low and a lower high. And the truth is, it probably doesn't even have to have a lower high. Just primarily, it has to have a lower low and then a higher low on the third candle. So basically, makes a point. This is just a typical reversal pattern right here. Okay. Once this pattern forms, all 3 candles, and this closes, this third candle closes, you're going to look for a breakout of that 3 candle pattern. whichever candle is highest. And that could even be the center candle. Second candle could even be the highest. Okay? So this could be I must have had a mini crash or something because my drawing tool disappeared too. This could be up here, and then you would take a breakout right there. Or this could be up here, and then the breakout would be up here. You see? So whatever the highest of these three candles is where your breakout is, the breakout point that you're looking for. And as soon as the very next candle forms, or as soon as the next candle forms, you start looking for a break above whatever the highest level of those three candles is. Okay? And in the case of the illustration here, it would be this one. Did everybody get that? More questions? Micolato. Let me just show you briefly where you'll find that. If you have, just add a stochastic indicator here to this particular chart. Stochastic right there. Okay, here's our stochastic. If you look over here, you will see a little gear icon. Click the gear icon, and there are your settings. Okay, inputs 14, 3, and 3. Wow, it looks like this one is 3, defaulting to 3. And that does make a really nice %K, doesn't it? So this is TradingView. Okay, back to the slides, and we'll cover you, Stuart. Now, as soon as you see a break of the high of that 3 candle pattern, right there, that's where you buy, right at the breakout. Okay, so after this 3 candle pattern is formed, I would just put a buy limit order, a buy stop order above that. Okay. Then you're going to put your stop loss 5 pips below the prior swing high, and you can identify this well in advance. Okay, so if you put your buy stop order up here, you can know exactly how high it is above this stop loss, and so you can size your trade well in advance. As soon as the 3 candle swing low pattern is formed, you can size your trade and put your buy stop order in. Okay, and your target will be 2 times your stop loss. So you can also know exactly where your target is going to be, so you can also put in your take profit position. Okay. Now, I don't want to confuse this issue, but I am going to say that I still like the stop loss of 1.5 times the ATR and the take profit of 1 times the ATR, and then take half of the trade off and let the rest of it run. I would still use this as a target for the second half, 2 times the stop loss. But if you want more information about that, I've got that in my trade management video from a few weeks ago, and I'll link that below the video. But that's the way I prefer to do things, because I've had great success using that style of trade management. Okay. Like I say, I don't want to confuse anybody by throwing in something new. This strategy right here is well documented in the Trading Strategy Guides blog, which I'll link below. So you can see exactly how to handle this. Okay. Now, like I mentioned, um, that was a buy trade. This is what a reversal or a sell trade will look like. You're going to look for the percent K to cross above the 80 level and then cross below the percent D. And you're going to look for the percent K to drop below the 80 level again. Then you're going to look for 3 candle swing high pattern. Okay. So that's just the opposite of the swing low pattern. You have candle 1, candle 2 has to have a higher high, candle 3 has to have a lower high than candle 2, and then your trade entry will be a break below the lowest point of those 3 candles. Whichever candle has the lowest point, that's your breakout. Put a sell stop order in. Your stop loss 5 pips above the prior swing high, and your target will be 2 times stop loss. And that is the stochastic day trading strategy. Yes, Melinda. Just reverse the directions of the candles and the indicators, and you have the sell strategy. Just easier to show you one of them and then just say repeat it in the opposite direction. Anybody have any questions on the strat or any trading questions for that matter? Let me see if I missed anything here. Stuart, see similar patterns on Bitcoin. Yeah. Now, Bitcoin is wild, isn't it? A huge trade on the Bitcoin for the last couple of weeks. Okay. Well, let's take a look at everyone's favorite time, trading maximum time. I was going to put some music here, but I forgot. I'm going to have to find some great music. Please zoom out once the 3 candle pattern. Let me. Benjamin, it's 14, 3, and 1. Back to the top, a couple of slides here. Does that help? Okay. And this webinar is being recorded, so it should be available to look at just as soon as we're done here. Someone asked me a few weeks ago what a maxim is, and it never occurred to me, and it probably should have, that someone might not know. But we do have a lot of followers that are not natural English speakers, so I should have explained this from the start. According to the dictionary, a maximum is a general truth, a fundamental principle, or a rule of conduct, or sometimes just a proverbial saying. Some of my maxims I use to keep me focused during my trading. Others are just motivational quotes that I find useful in general. I use these maxims to help me not only in my trading, but in my workout and in everything, my whole life focus in general. Most of the maxims come from reading or are suggested to me by friends or coaches or teachers or other acquaintances. And I'll add a new maxim to my list whenever I find something that fits me. I do hope they help you as much as they've helped me. I also suggest that you start your own list of maxims to help you in your trading. Feel free to borrow any of mine from my list. I hope to put them in an ebook someday. Today I'm drawing from the archives. Trading maxim number 2. There will always be another trade. This is actually one of my favorites, and I say this a lot. Don't get FOMO. FOMO is fear of missing out. If you miss a trade, it's no big deal. There will always be another trade. There will always be another trade. Just remember that. If you waited too long, you missed a trade, just say that to yourself. There will always be another trade. There are hundreds and hundreds of instruments you can trade. All of them are making signals all the time. Don't take a trade late. Don't take a trade that doesn't meet your criteria 100%. There will always be another trade that meets your criteria and that you will be on time for. Don't bend the rules just because you want to be in a trade. FOMO, yes, I like it. Fear of missing out. I'm not too good at drawing with my mouse. Fear of missing out. FOMO. Don't get the FOMO syndrome. Aki. Can you use a lower time frame, like 5 minutes? Oh, absolutely. Try it out. Test, test, test. Test. Did I say test? Yes. Test it. Okay. Test it on everything that you're going to try it on. Test. Back test. Forward test. Everything. I spend more time testing than I do actually trading for confidence and also to just find a better way. All right, but listen, I'm trained as a scientist. Okay, I studied microbiology in college, and that was 3 or 4 years ago, maybe 5 or 6, or maybe 40 years ago. In any case, I'm a firm believer in the scientific method. Testing, documenting, testing some more, documenting some more, finding what works, finding what doesn't work. I don't put a new strategy into play until I know that it works. Okay, so test always and try new things. You may stumble across something that works wonderfully for you that nobody else even thought of. Okay. Let's see. Shalendra have been requesting trading strategy for their paid strategy indicator, but there has not been any response. If you're with them, kindly have. Okay, Shalendra, I'm not physically with them, but I think they're probably monitoring this chat. In any case, I will pass your message on and make sure that somebody gets it. Okay. Okay, because Casey's in here, and I think Ben may also be in here, or at least they were. So. Okay. There will always be another trade. These are the steps for the strategy today. First, check your daily chart. Make sure that the stochastic indicator has dropped below the 20 and the percent K line is crossed above the percent D line. These are rules for a buy trade. Drill down to the 15-minute time frame and wait for the stochastic indicator to do exactly the same thing as you look for on the daily chart. Okay? And like I say, in practical terms, start by looking at your daily chart. When you sit down to trade, the first thing you're going to look at is your daily charts, and you're going to look for any daily chart that has the stochastic below the 20 or above the 80, and that the percent K has crossed back over the percent D. And then you're going to make a list of those, and you're going to watch 15-minute charts for the exact same signal throughout the day. And it could apply for the next day as well. Okay. After the stochastic percent K line crosses back above the 20, then look for the swing low pattern to happen. Okay? Swing low pattern, you're going to buy the highest point above the swing low pattern. So I would probably put a buy stop order, a pip above the swing high. I mean the high of the swing low. And then put the stop loss below the most recent 15-minute swing low, and your take profit at 2 times the stop loss. Okay. Stuart, you know, that's a really good question, and I have intended to make these slideshows available, and I will talk to the guys about where we can post them and how we can make them available for you guys to download. Okay, I will make a note of that right now. Okay, any other questions? Comments? Opposing viewpoints? As some of you probably already know, tomorrow is a U.S. holiday. We call it Independence Day. My British friends call it Treason Day. I got one of my really good British friends. I got him a T-shirt that says "Happy Treason Day, ungrateful colonials." Yeah, they're still my friends, and I love them. Whatever you call it, Trading Strategy Guides is having an awesome sale for the next 8 days. These right here are some of the deals that you can expect to see. Don't miss it. It's going to be huge. I'll link this sale below so you can take advantage of it right away, you guys. Any other questions? Would this work for multiple day swing trading? You know, probably so, Trueface. You know what I find that any signal that works on the 15-minute or the hourly charts works even better on the daily charts. So if you're very, very patient, then you can do these things on the daily charts. I trade mostly daily charts myself. The analysis that you see me do on Monday and Friday, I'm just doing a video of my own analysis and my own trades. I do those. I also have some strategies that I run on daily Forex charts as well. And I like daily trading or swing trading because I don't have to look at the charts all day. I don't have the focus or the concentration ability to look at charts all day long. I probably said this before, but I have a friend who trades. He can stare at charts for 18 hours a day and not fall asleep or not, you know, inside of 30 seconds, I'm off watching cat videos or something, you know. So I just am all about spending 30 minutes a day looking at the daily charts to find a signal. I spend a little bit more than that looking for setups on the daily charts, particularly the stocks. But it's not like I have to stare at the charts waiting for a signal to happen. You know? So that works fine for me. Difference between the stochastic and the stochastic RSI. Lynn, that's actually a pretty good question. And I'm sorry, but I don't have the answer to that. I suspect, no, I'm not even going to try to guess. But if you wouldn't mind, um, you would email that question to me at imblack@tradingstrategyguides.com. Imblack at tradingstrategyguides.com. I will get you details about that. Okay. The truth is, I've never used the stochastic RSI, so I'm not sure. Yes, Casey, great deals. I looked at this sale last night, and I went, wow, 50% off most of these things. Oh, sheesh. Okay, anybody else have any questions on anything? I'll even take a stab at life questions. Some days I just won't do that, you know. Actually, the meaning of life is 42, right? Yeah, I'm a sci-fi geek, so I say stupid things like that. Okay, guys, let's do this again next week. Come back Wednesdays at 9 a.m. U.S. Eastern Time. That's New York time. These webinars. And watch for my my analysis videos on Monday and Friday, usually sometime in the afternoon. And the time in the afternoon depends upon how long I had to spend all day looking for a great trade setup. Because I really only put the primo trade setups in the videos. So there are several other ones often, but I like the best ones, and the ones that are closest to triggering, I try to stick those in there. Okay, as always, thanks for watching and thanks for subscribing. And if this webinar helped you, please hit the thumbs up below. And if there are no more questions, have a great remainder of your week. If you're in the U.S., have a great Treason Day. Otherwise, have a great regular day. And I will see you guys next week. Same bat time, same bat channel. Totally dated myself again, didn't I? You guys